This is what you need to know in plain language about the new Companies Act. We have 10 simple and practical tips for you. For me, I would describe the new Companies Act as a very welcome and positive change in companies law, and it's an opportunity for you. The purpose of the legislation is to modernise and simplify company law. It's to reduce the administrative burden on business. And the legislation deals with how companies are formed, administered, wound up and dissolved. The new legislation also deals with how shareholders and creditors are protected. But the new legislation does not address rights of employees, taxation and residence of companies or directors, administration and registration of charities, commercial contracts, or consumer protection. They're left for other pieces of legislation. So how will the new Act affect you? Every company will be affected to some extent. New forms are now available on the C.R.O website. There are new obligations on companies and directors, such as private limited companies must elect as to whether they will become an LTD company or a DAC company. Loans to and from directors should now be in writing. Audit exemption is an important element of previous legislation and the new legislation. This audit exemption is available to small companies, and a small company is a company where the balance sheet does not exceed 4.4 million euro. The turnover does not exceed 8.8 million euro, and there are not more than 50 employees. Now, of these 3 criteria, only 2 need apply. Importantly, guarantee and group companies will now be able to qualify for the valuable audit exemption. The qualification criteria for a company to be considered a medium-sized company for the filing of abridged financial statements has been widened. Balance sheet not exceeding 10 million, turnover not exceeding 20 million, and number of employees not exceeding 250. But again, only 2 out of the 3 criteria need apply. Importantly, the C.R.O will no longer be able to waive penalties for late filing. Applications for waiver of penalties will now have to be made to the district court. But the good thing is that the district court will now be able to extend the annual return filing period and will be able to confirm no loss of audit exemption. Again, another component to try and simplify things is that for an awful lot of documentation for companies, there no longer be a requirement for documents to be sworn, except in limited circumstances. Now, just to put all of this in context for you, 86% of Irish companies are in fact private limited companies. What can you expect to see? You can expect to see a new form of simplified private company limited by shares, which will use the abbreviation, I expect, LTD after its name, though there are other variants permitted by the legislation. So you can expect to see a name of a company now like you've always seen it, the Bread Company Limited. There's a new type of company coming into existence. It's going to be a new designated activity company, which will have to use the initials DAC, D-A-C, or any variants permitted by the new Act after its name. So we can expect to see a company like Financial Services, DAC. Companies limited by guarantee will now have to use the abbreviation CLG, Company Limited by Guarantee, or variants permitted by the new Act in their titles. An example might be Best Management CLG. Unlimited companies will have to use the abbreviation UC after their name or variants permitted by the new Act. So an example there would be Safe Builders UC. So we're all going to have to get used to new names for companies. My own expectation, when everything falls into place, is that most companies will become LTD companies. And I think that will account for roughly 80% of the companies. I think the new DAC company will probably make up 6% of the number of companies. I think the new CLG abbreviation will be seen on 8% of companies. I think the UC abbreviation in the name will be seen in 2% of companies. I think PLC, which we're used to, will remain at 1%. I want to explain to you now, and this is important that you know this, about the new simplified limited company, which I think is probably a very beneficial part of the new legislation. This new LTD company may have only one director, but must have a separate company secretary. It will no longer be restricted by its objects clause in what it can and cannot do. It will have a simple one-document constitution instead of a memorandum and articles of association. Importantly, the somewhat complicated Table A is abolished, and it's replaced now with 156 statutory default provisions, which will apply to govern a company and which can be disapplied, modified or supplemented where the Constitution so provides. Importantly, the new LTD company will be able to pass majority written resolutions, which reduces the need for EGMs. Importantly, this new LTD company may not need to hold an AGM, an annual general meeting, in certain circumstances. The new constitution for this limited company can be as short as a single page. I want to tell you a little bit now about the new designated activity companies. And one of the questions that comes up is, well, who's going to go for this type of company? Who's going to be a DAC? And my expectation is that it's likely that credit institutions, insurance companies, joint ventures, charities, and financial service companies will opt to become DACs. A DAC is a private company limited by shares or by share and guarantee. A DAC will have to have at least 2 directors. A DAC will still have an objects clause limiting what the company can do. A DAC will be able to pass majority written resolutions, which again will cut down on the need for EGMs. A DAC is required to hold an AGM where there are 2 or more members. A DAC will have a 2-document constitution, a memorandum and articles of association with stated objects. There's a transition period allowed of 18 months for existing limited companies to opt for conversion to either an LTD company or a DAC company. Companies that do not convert will operate under the DAC legislation until the end of the transition period. If companies do not convert, they will be converted to an LTD company by the C.R.O. at the end of the transition period. What I want to do now is tell you a little bit about companies limited by guarantee. Who's going to opt for this type of company? My expectation is that this type of company is likely to be preferred by sports and social clubs, charities and property management companies. The key feature is that there is no share capital, no shareholders, only members. The number of members is now unlimited. There's no maximum number of members. This CLG company will have an objects clause limiting what the company can do. 2 or more directors will be required. Importantly, directors will be obliged to retire by rotation. Single-member CLG companies can dispense with an AGM. The CLG companies will also be able to avail of audit exemption, provided they qualify under the other financial requirements, but any one member can object. What I want to talk about now are the key changes for external and foreign companies. An external foreign limited company registered abroad may establish a branch in Ireland. Registration must take place within 30 days of the establishment of the branch in Ireland. External companies which had registered as a place of business under the old Companies Acts are now cancelled, but may consider re-registering as a branch. Place of business registration will no longer be possible. External companies are required to register with the Irish C.R.O. if members have limited liability and a branch is established in Ireland. What I want to talk about now are the duties and liabilities of directors. Directors have a number of statutory duties that they must comply with. They must act in good faith in what the director considers to be the interests of the company. They must act honestly and responsibly in relation to the conduct of the affairs of the company. They must act in accordance with the company's constitution and exercise his or her powers only for the purpose allowed by law. They're not allowed, and this is an important one and significant, they're not allowed to use the company's property, information, or opportunities for his or her or anyone else's benefit, unless approved by members or in the company's constitution. They're not allowed to agree to restrict their powers to exercise independence unless permitted by the Constitution. Directors have a duty to avoid any conflict between the director's duties to the company and the director's other interests, including personal interests, unless released by the company's constitution or by members. Directors have a duty to exercise care, skill, and diligence. Directors have a duty to have regard to the interests of the company's employees and also have regard to the interests of the members of the company. New duties. So there are new duties and liabilities on directors. So directors now have the duty to appoint a company secretary with the skill necessary to discharge his or her statutory duties. There's a duty to prepare and deliver a Section 19 constitution. There's a duty to prepare a compliance statement for larger companies. The duties of directors are owed to the company. A company can sue a director for breach of duty. Another important part of the legislation relates to loans by directors to the company. Now, loans by directors come in many guises, including startup costs, deferred salary, purchase of assets, payment of debts of the company, deferred expenses, the list goes on. All loans by directors to companies should now be in writing. If a loan is not in writing, there is a rebuttable presumption that the loan is a gift to the company. If it is shown that the loan is not a gift, then there is a rebuttable presumption that the loan is unsecured and does not bear interest. Importantly, these are matters which would be of interest to auditors, the revenue commissioners, and liquidators. The other aspect of loans is that there are loans by the company to directors. Significantly, loans to directors in breach of statutory limits are the most commonly reported offence to the Office of the Director of Corporate Enforcement. All loans by a company to a director should now be in writing. If a loan to a director is not evidenced in writing, there is a rebuttable presumption that interest should be charged on it. If a loan to a director is not evidenced in writing, there is a rebuttable presumption that it is repayable on demand. What I want to talk to you now briefly about what are the functions of the company secretary. Every company requires a company secretary. And if it's a new LTD company with only one director, that one director cannot be the company secretary. No specific qualifications are required by a company secretary, but the directors must take all reasonable steps to ensure that the company secretary has the necessary skills to discharge his or her statutory and other legal duties. Resources need to be provided to the company secretary. The functions of a company secretary are essentially administrative and not managerial, and include maintaining the statutory registers and minute books of the company, convening meetings of members, ensuring that statutory forms are completed and filed on time with the C.R.O, and delivering copies of resolutions to the C.R.O. What I want to do now is to give you 10 tips. My first tip is that you should review directors' loans. If there are loans either by the company to a director or by a director to a company, they should immediately be put in writing. Tip number 2, you should review who in fact are the directors and company secretary. Tip number 3, you should review any other directorships that you hold. My next tip to you is that you should transition to a limited or DAC company early. It reflects well on your business. My next tip to you is that you should review any historic or ongoing concerns. This is an opportunity for reviewing your business. My next tip is that you take the time now, because you're having to carry out a review, that you look at the memorandum and articles of your company. See what sort of constitution you want to now create, and see what way you want to operate your company. My next tip is that for new small companies, I would encourage you to strongly consider opting for the new simplified LTD company. My next tip for you is that you should review your business structure. If you are a sole trader, avail of the protections given by company law. The cost of running a small company has been significantly reduced with the audit exemption. My next tip for you is that you review the development of your business. Different eggs in different baskets is a line I say very often. You should consider having a different company for different types of business, so that if one aspect of your business fails, it's not a catastrophe. And my final tip for you is to read the excellent leaflets that have been prepared and are available on the C.R.O.ie website. Thank you.